The Morgan Report with David Morgan.
David Morgan, themorganreport.com for the week ending 26 November 2021. Well, we're almost at the end of the year. I'm actually recording this on the 28th, Sunday, a couple days later than I normally do. I just got back from a trip to enjoy Thanksgiving with family. So I'll be brief, and I don't often do this, but I thought it was such a good article. I've known Rick for a very long time. He publishes Ahead of the Herd, lots of good information. You can sign up for his free information. But he wrote this article, Silver Demand to Exceed 8 billion ounces for the first time since 2015. And he shows you, of course, a chart from Kitco on the 5-year silver price. And as I've mentioned many times, and if you are new to the video, then bear with me, that silver was in this range below 20 for about 8 years. And then in May or so, we saw this big shoot up. It's actually earlier than that, up to the 25 and beyond level. And it's been consolidating in that wide range ever since. So from a longer term perspective, it's doing better than it was. Broke loose of a very low level consolidation and now is reconsolidating. So on balance, it's doing okay. Certainly not what most of us silver bulls expect, but nonetheless, it's not where it was during that other time frame. So moving on, Silver Institute believes the impetus for investors to stockpile silver will continue, predicting that global silver demand will rise to 1 billion ounces this year, meaning 2021, up 15% from 2020 and exceeding 1 billion ounces for the first time since 2015. Now, let's pause here because this is extremely important. The investment demand in 2020 was a record, I mean record demand. The demand from retail was about 200 million ounces, which I believe is a record or very close to it. But the institutional side was like 320 million ounces for a combined total of about 520 million ounces. Off the charts record demand in 2020, last year. Again, we've got another month before this year ends, and we really won't know what the statistics are until probably April of 2021 because there's obviously a delay between mining activity reporting, recycling, everything that we gather to get the numbers as far as what the total demand is in the silver market. Having said all that, it'd be interesting for me to see if the investment demand was as robust as it was in 2020. My personal thoughts are probably not, but could be, certainly with the Wall Street silver issue, which started about the time that on that graph above showed where we got that big move in silver and are now consolidated, primarily for more awareness as silver as an investment. And Rick goes on, talks about silver bars and coins will continue to hold investors' interest. The Silver Institute predicting physical demand in 2021 will increase 32% to 64 million ounces, pushing it to a 6-year high of 263 million ounces. So that's just reasserting what I just said a moment ago, that total demand on the retail side last year was about 200 million. And this is showing about 263, so that would be a new record on the retail side. Again, according to the Silver Institute, 2021 mine silver productions is expected to rise 6% year over year to 829 million ounces. The recovery is largely as a result of most mines being able to operate into full production and not have the pandemic issue. U.S. inflation, 6.2%, highest since 1990, and above the forecast. Industrial demand. Silver's hundreds of industrial applications make it a very responsive to the condition of the global economy. As the U.S. economy has emerged strongly from the funk of 2020, increased demand for manufactured goods, including solar panels and electronics, has been a boom for silver. Shows the silver supply. This chart's fine. It's a pretty good overview. There's a little difference between what the CPM group shows and what the Silver Institute shows. And there are some others, Metals Focus, and some high price reports you can buy. But generally, that's pretty accurate. You go through this chart. I won't stop here. going back to mine, although mine production has come back from the COVID restrictions lifted, the 892 million ounces, and only 6 weeks ago for the end of the year, is still lower than the 2019 863 million ounces. So you can bear that in mind. Conclusion, and I think Rick did a good job here, putting everything together, in my opinion, Rick's, and I'll agree with him in most of this. There's really only one conclusion now. It's a great time to invest in silver. Upward price movement is also likely as a result of inflation, the inflation scenario, and this is shown in his other articles. And this just in, with Americans thinking about tucking into turkeys next week. Of course, I'm doing this post-Turkey Day, as you know. How much of a Thanksgiving dinner with all the fixings in dollars versus silver and gold? Jeff Clark, who's a good friend at goldsilver.com, crunched the numbers and found that over the past 20 years, the average cost of Thanksgiving dinner has risen 40%, but if those same dinners were paid for with gold, the cost of the turkey day has fallen 78%. If priced in silver, the cost savings are more dramatic, according to Jeff Clark's conclusions or calculations. Now, this is always a bit of a controversial thing because it depends where you put the starting line and, you know, how much data you do. Is it for 5 years, 10 years, 15 years, 50 years? Nonetheless, his point's well taken because over the longer term, precious metals do maintain their value and sometimes exceed what the paper paradigm produces for purchasing power. So I'll leave it at that. Just a few more articles to show you, and I'll conclude with this week's weekly perspective. This is another article about silver, forgotten precious metals. You can look it up. It's on Share Cafe from Glenn Dyer. Not a lot that we haven't already covered with Rick's article, except for one thing I think is very important here, and that is talking about the amount of demand in India, because most people don't know how that huge demand I just outlined from investors in the United States, in both retail and institutional, could be met. And the reason is massive amounts of silver was sold in India last year. Talking about both markets, industrial and retail or investment, marked upturn in key countries, especially in India, as the economy and consumer sentiment have bounced back more quickly than expected as restrictions ended in time for the all-important wedding and festive seasons, analysts said. And the other one here I think we can note is looking at the market supply-demand fundamentals. Metals Focus, which is a good research firm, looks for silver to see a modest supply deficit of 7 million ounces. This will mark the first deficit since 2015, the report said. This could be very controversial. It depends on how you measure a deficit. I'm not going to go into it. I've done it many, many times. Steve St. Angelo has done it many, many times. What I like to point out is something very simple that most people can understand, and that is, what is the above ground stockpile of silver doing? Is it increasing or decreasing? From 1990 to 2006, it went from 2 billion ounces to 500 million ounces. It decreased by 1.5 billion ounces. From 2006 until present day, the above ground stockpile of silver has gone from 500 million ounces to roughly 2.5 billion ounces. So it's increased. So you can make up your own mind what constitutes a deficit. The amount of investment demand is really what's not taken into account accurately. I think Steve St. Angelo does a great job pointing that out, so I'll refer to him in this case. I won't belabor it. I'll go ahead and close out this week's weekly perspective with renews.biz. This is talking about solar installations projected to grow 20% in 2022. The photovoltaic installations will see an increase 20% in 2022, surpassing the 200 gigawatts area for the first time. And of course, these are projections, but these are pretty good studies. In addition to the announcement of new solar power restrictions in mainland China in the latter half of 2021, the severely restricted output of manufacturers in certain provinces impacting production of key materials such as metal silicon, polysilicon, and solar glass further adds to increasing prices. So there's uncertainty in this market, like all markets now under our current economic conditions globally. Continued supply chain tightness is expected to maintain high module prices through 2023 or until 2023. The wild card for 2022 forecast is the policy uncertainty in China and the U.S. and India. That should be resolved first quarter 2022. These announcements will have major consequences for manufacturing capacity decisions and market installation pace. Despite the 2-year impasse in solar photovoltaic cost decline, solar continues to be one of the energy technologies with the lowest capex and fastest energy sources to install. Over 1,000 gigawatts of new solar installations are expected to be installed through 2025, driven by solar technology's competitiveness, versatility, and installation speed that will be instrumental to contribute to the decarbonization of the power system this decade. So there I'll leave it. Lots to say about silver this week. I'll be back with you next week with another weekly perspective. This is David Morgan of themorganreport.com.